Hello, with me today I have Khanh Vu, Portfolio Manager of the VinaCapital Vietnam Opportunity Fund. Vietnam, previously one of the poorest countries in the world. I mean, Vietnam's come a long way. What's your view on the domestic economy and growth prospects?
I believe the fact is that we're the fastest country to grow from poverty to middle income, the fastest in history. Today we're looking at GDP per capita of about $3,000 US, and that marks a really important point, because if you look at other Southeast Asian economies, when you get to a point about $3,000 US per capita, you see this incredible trajectory for growth. So for 2022, we're forecasting the economy to grow about 6.5%. It may grow a bit more, particularly if tourism opens up and that opportunity to travel and welcome tourists returns. Then it may add a few more percentages to the GDP. But today we've been a huge beneficiary of a decade of foreign direct investments. We've seen a lot of companies, foreign companies, come to Vietnam, move their factories to Vietnam, away from China, away from Thailand. We think that over the past 5 years, over $100 billion US dollars has been invested into the country to build up the factories. And from that, you can see that workers' salaries and wages rise. You see that there's this urbanization from the countryside and the farms into the cities and the factories. So this is a really important theme, and that's what's, I guess, helped move our country out of poverty to where it is today.
Well, look, I mean, Vietnamese exporters depend heavily on the US, and Vietnam is one of America's biggest markets. So, will the US likely remain critical to growth in Vietnam?
Absolutely. Vietnam, we export about $100 billion US of goods to the US. That phenomena was really put under the spotlight during the past 2 years, where there was a lot of this working from home. So during that time, we were manufacturing tables and chairs and televisions and exporting that to the US. There is this thought that perhaps US consumers are now shifting more towards services, but we've got to be mindful that savings rates in the US are at an all-time high, I think over $2 trillion US, and wage growth in the US over the past 2 years has been quite significant. Wage growth in the US is over 5%. So we still believe that US consumers will still have high demand for goods. And also what we've seen is that Vietnam has shifted a lot of our exports from what used to be, clothes, shoes, and today we're manufacturing a lot more high technology and high value add goods. So for example, Samsung, they produce over 50% of their smartphones are manufactured in Vietnam. Intel, all of their desktop chips today are manufactured in Vietnam. Your clothing from Nike and Adidas, a lot of it's made there. And recently, Lego just announced that they were building out, I believe, the 5th or 6th factory only in the world in Vietnam.
Obviously China, got to mention China, but Vietnam's importing more than ever from China. I mean, what's the relationship like, and do you worry about the dependence on Chinese materials?
Vietnam, we share a very long border with China. We're very close neighbors. They are a very important trading partner to Vietnam. Over $100 billion US of imports come from China to Vietnam. Much of that import goes into finishing goods, assembling and exporting to the US. So it is very important, our relationship. There is no political strife between Vietnam and China because we are very important trading partners. I think the economics that underline that relationship far surpass perhaps any tensions. Vietnam seems to be a beneficiary of a lot of the trade disputes that are happening between perhaps the US and China. We are a country, Vietnam is a country, we have over 17 free trade agreements. We're probably one of the most connected global trading economies in the world. And so, yes, America is important, yes, China is important, but equally other blocs like Europe, the United Kingdom are very important trading destinations for us.
There's lots going on in the world at the moment. Yeah, a lot of macro events. Supply chain problems, inflation, higher borrowing costs, rising interest rates. We're seeing them have an impact elsewhere. What about in Vietnam?
We can see that rising inflation, higher commodity prices, higher fuel prices are certainly impacting inflation in developed markets. In Southeast Asia in general, and in Vietnam specifically, we have a much lower dependence on fuel and oil. For example, Vietnam, the CPI basket, only about 3% is directly attributed to fuel. And if you put everything in together, fuel and fuel-related costs, it's less than 9%. Food is an important component of the CPI basket. It's about 1/3 of the basket. But unlike in developed markets or in Middle East, African, European markets, where there's a high dependence on wheat, for example, Vietnam, we are actually a net exporter. We're an exporter of food. And specifically, we're the second largest exporter of rice. So what we've seen is rice becoming an interesting substitution, perhaps, for wheat. And so really, Vietnam is really benefiting from rising prices. We're not seeing the same inflationary pressures in the country. Within the region, the intra-Asian or inter-Asian trade, we haven't seen the rising costs in transportation, logistics, shipping costs, as perhaps we've seen to the US or to the UK. So again, inflation figures in Vietnam specifically have kept very low. I mean, last year we ended at about 1.8% increase in the CPI. And for March, for example, this year, 2022, we're up about 2%. Whereas if you look at markets like the US or the UK, we're looking at over 8% increase in the month of March. So you can see that very clearly that we aren't suffering the same inflationary pressures. Wage growth in Vietnam has been kept very minimal. And really, even though we've had an increase in the minimum wages, for the most part, factories are paying well above that. The other thing is that interest rates in the world are obviously rising, led by the US. We're not seeing similar pressures in Vietnam because essentially the government wants to keep rates low to stimulate the economy, to stimulate growth. And really the focus for Vietnam at the moment is to this, it's focused on recovery, focus on this growth.
Okay, well, you're optimistic about the Vietnamese economy. What about domestic stocks and for the Opportunity Fund, more specifically?
Yeah, so domestic stocks, as I said last year, the stock market did well, our fund did well, but our focus remains on private opportunities. And at the start of this year, we've seen a lot more volatility in the stock market. But the way that we invest, the downside protections that we have in our investment, we've been able to lock in some very good returns. For example, we just did an exit just last week in a company we invested in just as the COVID pandemic broke out. It's a private equity investment. Over those 2 years, we were still able to deliver a strong return, 21% IRR. If you look at the index over that same period, it was only up about 15%. So our strategy, our focus on private opportunities has been able to allow us to deliver outperformance to the index. Looking ahead into 2022, we can see that the earnings growth in our portfolio of about 17 public stocks, about 10 private equity investments, the earnings growth in our portfolio is about 35%. Whereas the index, or the market this year, we're expecting about 20%. So the quality of the earnings, higher earnings levels in our portfolio, we think that it's going to translate to a strong performance this year.
Khanh Vu of the VinaCapital Vietnam Opportunity Fund, thank you very much for joining me today. To watch more of our fund videos, make sure you visit the Interactive Investor YouTube channel and also make sure you hit the subscribe button.